Morning, everybody. And my apologies for the somewhat odd address via phone to you. I understand that Jochen shared with you some of the reasons why it is better to hear me only today and not to see me, because the social impact that I had to go after yesterday with the birthday party of my brother prevented me from being in Berlin with you today. I apologize for that. But nevertheless, I'm very honored that Jochen has extended to me the invitation to address you today and to talk to you a little bit about the perspective that led us at European Investment Funds to engage in impact investing and to share with you a few thoughts of how we are going to take that forward or what our intentions in that space are. Actually, if I'm going through this topic with you, I will, for the sake of being slightly provocative and spark the discussion amongst us, be slightly provocative and try to challenge you with three questions. And please put up the first slide of the three questions that I would like to address today to us as a collective forum, from which I think that some of them at least may hurt our pride. You know that we have been exposed to quite a turbulent time in the financial markets since the financial crisis in 2008, and that has led us to rethink quite a number of dimensions of how we are going about value creation and how we are going about creating richness or wealth. And those two terms that have in the past been considered as being equivalent since 2008 have probably demonstrated that are not necessarily the same. And in looking at how we are going about the outfall of the financial crisis in 2008, the observation that I make is that while we might have to come to some sobering experiences and insights, we not necessarily have actually led the change that has to come about the main ways how we are going to create value, that those main insights have not filtered totally in our mind, and that is the reason why I would like to expose you to a kind of small journey to reflect on whether we have actually already triggered in our behavior the change that there is needed in order to reach sustainability for our society. Can we go to the next slide, please? And I will confront you with the question that puzzles me and that kind of disturbs me when I observe the way how we are going about funding businesses and sustaining businesses in our current economic system. I would like to throw at you a number of figures that actually may sound very bold and that are very intriguing to me. Can we go to the next slide, please? On this slide, which has the title of the question, Depreciating Our Planet, you see three figures that are hardly pronounceable, at least for me not being a native English speaker. But the first one that you see up there is the figure that stands for the direct environmental damage caused by the 3,000 biggest stock market quoted companies on the planet. And those are actually environmental costs that are tracked by an organization called True Cost on a yearly basis, and that is the figure that corresponds to the number that they came up with for the year 2008, the year in which the financial crisis actually hit our economic system. If you look at this number in terms of economic value that is going down the drain by the action of those 3,000 biggest stock market quoted companies, you're tempted to compare that in order to put that into relation. And that is the reason why I put in the second line the market cap of a company called Apple, which most of us know. And if you look at it, it basically tells you that we are throwing every year more than 3 times the market cap of Apple as a company basically down the river. That's quite an impressive statement in itself. But if you look at the line that is even below, which is a $700 billion US figure, That is the amount of value that we are throwing away in non-perished consumer goods in the textile and food sector alone on a yearly basis. Non-perished goods in the consumer sector, in the food and textile sectors alone. Basically things that can be used and consumed and are not consumed but thrown into the bin. If you look at this, it's what is intriguing to me is not so much that we are wasting those resources, because human nature has always been relatively careless when it came to things that humanity considered being available in an unlimited way. But what actually bothers me is that given the fact that we consider ourselves being very smart business people, that we have brilliant ideas on how to create value for humanity and for ourselves, and richness for ourselves, I am wondering, why can it be that we are not more creative in finding a way to exploit this amount of money that are displayed on this screen to create wealth for ourselves and for society? Why have we no better idea than throwing this away? And that is something which I think in our mindset in addressing the opportunities that we are seeing out there in the economic life, we need to recognize that with the way that we are reproducing what has been leading over and over to failures in the past, we might have to reconsider the way how we use our creativity. Can we go to the next slide, please? The second question that I would like to ask you in order to set the scene for our debate here is to ask you that if you had the choice between building 20 additional nuclear power plants in Europe or saving the equivalent amount of energy, what would you do? Well, I presume that the answer might have been for some people pre-Chernobyl in pre-Fukushima might have been a different one, but I think generally speaking, especially with the mindset that we've gathered in the room that you're sitting in today, we probably would prefer saving the energy that actually is produced by 20 nuclear power plants rather than producing or building up another 20 nuclear power plants in Europe, especially given the kind of time frame and consensus finding process that we would need to go through in order to make this project true. Well, if that is true that we would prefer to save the energy rather than building 20 new nuclear power plants, I wonder how it can be that the figures that we are producing in our economic life and which I display to you in my next slide come out that way. Can we go to the next slide, please? The next slide actually, which is called EU's energy landscape, is supposed to give you a little bit of a comparison of a few values and figures in the European energy landscape. To the left, the kind of yellow bar that you see is the total energy consumption in the European Union in million tons of oil equivalent. What you see in the next bar, which is a very tiny blue layer down at the bottom, that is the amount of total EU production in wind and solar energy. I will skip the third one because I will come back to you, but the fourth one, which is the dark gray one, that is the residential energy saving potential that we have in the European Union, meaning that that is the amount of energy that we could save if we actually upgraded our real estate facilities in the residential area to technically feasible and cost-efficient measures. And to the very right, you will find in light blue the technically achievable energy potential, which includes all the technical energy potential saving measures that we could actually implement, but some of them are not yet affordable in a kind of direct cost-benefit analysis for the individuals or the companies concerned. Now, the one item that I've chunked in the middle, which is the light gray layer at the bottom, that is a new measure that I've created for the purpose of illustration here, and it's called Cattenom equivalent. Cattenom is the second largest...
Sorry, didn't quite hear what equivalent?
Cattenom equivalent. Cattenom is the name of a nuclear power plant at the border of Luxembourg. It's the second largest in France. It comprises 4 nuclear reactors that actually produce not only a lot of energy, but also produce a lot of political disputes between France and Luxembourg, why this power plant has to stand at 5 kilometers from the border. But I'm not for this reason actually mentioning this, because I'm mentioning it rather because it gives you the dimension of how much an additional nuclear power plant of the size of Cattenom would actually add to the energy solution of Europe compared to the energy saving potential that we could actually generate with simple upgrading measures of residential housing equipment. Now, if that is the fact on the supply and demand side, let us visit what we are doing on the investment side. Can we go to the next slide, please? What is coming up here is a comparison between the energy landscape that I just have demonstrated to you and the institutional energy investments that we are conducting in the European Union. And despite the fact that we have got a tremendous potential of value creation available in the energy saving area, you will see that we spend still far much than 50% of our institutional energy investments on producing new energy rather than saving energy. And actually the energy savings, which you will see is the tiny little slice in dark gray to the upper left side of this pie chart, is actually corresponding to the big block that we've seen in the previous chart of the energy saving that we could actually materialize. Again, it's something that from an economic, from an investment, from a value creation point of view, I find counterintuitive in logical terms. Can we go to the next slide, please? And let me address to you the third question that I've got for you today. Do you know the name of the last state that has been formally recognized by UNESCO? Think of it for a second, and if you're tempted to come up with a suggestion like Palestine, it's a nice try, but it's wrong. Because the last state that has formally been recognized, and it was in 2013, and we jump to the next slide, please, is a state called the Garbage State. It is a state that actually has been proclaimed by UNESCO in order to draw the attention to the fact that the waste that we have kind of dispatched in the oceans of this planet, and which is swimming around in terms of plastic waste out there and is polluting our oceans, but also entering the food chain, which is ultimately going to hit us. This dimension actually has reached a surface which is equaling 6 times the surface of France. And hence the UNESCO has decided, in order to raise the awareness of that, to actually proclaim this as a state. And maybe you will find some inspiration on this chart what the next holiday destination will be. If you fancy this one, I think we're exactly on the right track to actually create holiday destinations of that nature for us. But if we are looking at it from the perspective that we would prefer spending our holidays somewhere on a sandy beach with some sort of nature life intact, I think we will have to reconsider the way how we are running our economic models, which are exclusively based on linear growth. And again, I would like to invite you for some reflection on your own experience in the interaction with consumer life that we face today. Can we go to the next slide, please? If you're looking at this chart, it gives you actually the distribution of functional deficiencies in electronic media and communication devices on a statistical basis. And what you will realize is, on the bottom, you've got the number of months of use of those devices. And on the left, on the y-axis, you've got the percentages of failure rates detected. And you will see that there is a pickup in the years up from 24 to 36. Well, not surprisingly, the warranty that you actually have on the guarantee that you have on your electronic device that you have purchased is expiring in the month 24. Meaning that actually from that point onwards, you don't get your device replaced, but actually you have to either pay for the repair or for the purchase of a new product of the same functionality. And since in most cases the repair is much more expensive than the new product would actually cost you, you're going to the next shop and you're replacing the product that is broken. Now, if you go by this model and by the linear growth model that we're facing in the economy, it is obvious that in terms of financial value creation for a company, this suits the company because they're going to sell more of their products to you. But if you also think that what devices and what happens with the devices that you're actually disposing after 24 months or 30 months when they actually go out of service in your own use, you will also make quickly the link that all the plastic and non-recyclable components of those devices will end up in the garbage patch state that I've been showing you before. Hence, there is a requirement that we think of business models that actually dislink with the creation of a financial return at the level of companies and the creation of financial return at the level of investors from the requirement of selling goods that are based on raw materials and are based on resources of which we know that they've got a finite lifetime. Now, you will ask me, where is impact investing in all this? Well, can we go to the next slide, please? Impact investing actually is an attempt to change our mindset in making investment decisions and not limit them exclusively to the creation of financial return generation, but also link it to the way how this financial return is generated and integrate the sustainability of those returns also from an ecological point of view. Next slide, please. And if we are reflecting on what we are going to invest in going forward and how this compares to our recent history, we will have to recognize that in the future we are going to invest more money in preserving wealth than we will invest in creating new wealth. If you're looking, next slide please. If you're looking at the three dimensions of investment decisions that we can take today, yes, of course, we can decide to go on with the type of investment criteria that we had in the past and focus exclusively on short-term financial return. But in the long run, those companies that actually prove to be sustainability hostile for themselves, but also for society, will destroy value, and not only humanitarian value, not only social value, not only ecological value, but we also destroy financial value for the investors in those companies. It is not surprising, for instance, that when we had the serial oil crisis and platform crashes and accidents in the various parts of the ocean, that the stock market value decrease of the companies that were exposed to those accidents has been much, much higher than the direct financial damage suffered from that. Because those companies know exactly that it is not only about the short-term financial return that they can generate for their business, but also for the long-term sustainability of their business models. And that today also includes the buy-in from the consumer communities to the products that they're selling. In the second dimension, actually where we actually see increasingly investors turning their attention and their funding sources to, we are looking at the value preservation through the conversion of businesses to sustainability-proof business concepts. And that is something which I was referring to when I was saying that we're going to invest more in the preservation of wealth rather than the creation of new wealth, because today we've got a huge number of companies out there that have currently viable business models, that have currently business models that are generating financial return that is attractive to investors, but of which investors become increasingly aware that those returns are not sustainable if the business model of those companies is not made sustainable from an ecological point of view. And that brings us to the third category of businesses which have the attention of investors in the market, which is the group of sustainability enablers. This is typically the area of the Cleantech companies, which are doing research and producing new technology, new business models, new ways of operating, new materials that actually allow traditional businesses to become sustainability proof. And we've seen in the recent decade quite some movement in this space, despite the fact that it also has been abused to some extent by kind of investment behavior that was looking at selling business models that had no innovation at all to offer, but just in a different package, just because Cleantech has been the kind of flavor of the month and everybody was referring to it as being the new paradigm. Now, why I'm telling you all this, it is in order to give you a little bit of the basis and setting the scene why EIF is engaging increasingly in this space. At EIF, in terms of impact investing, we've launched our activity in the last year, in 2013, by launching a first fund of funds that was looking at social impact investing as an investment theme, where we are backing social enterprises, creating societal value at the core of their business focus into our fund of fund investment activity. And we have today an investment activity in that space that runs off a fund of fund investment volume of roughly euro 250 million. As we speak, we are evaluating the extension of our impact investments approach also to the environmental space. So far, we have been reactively active in the environmental area by investing in Cleantech and Cleantech funds. And as I said to you, we have experienced that there have been a number of very pertinent investment approaches out there that we consider have contributed substantially, not only to the diversification of our economic considerations in that space, but have also brought forward a kind of policy agenda that we have actually very much sympathy with and we are very determined to endorse. But beyond that, our approach going forward will be that we are looking not only at Cleantech type of funds that support the emergence of sustainability enablers, but we also look at fund managers that create economic and ecological value by the combination of those investment dimensions in their investment approach and by deliberately seeking to convert businesses to competitive businesses of tomorrow by integrating sustainability dimensions in their analysis of business, but also in the shaping of the business and the economic and strategic development of those businesses. That is the approach that we're currently working on, and we are seeing a number of funds out there in the market that are looking at proactive impact agendas in their investment approach, not anymore because they feel it is a kind of marketing tool for them to access new investor bases and new type of areas that they can market themselves with, but because they have realized that within the life horizon of the private equity funds today, those dimensions are likely to become competitive dimensions in their business models, and hence will constitute part of their track record, not only in terms of the impact that they achieve, but also in terms of the financial return that it can offer to the investors. With that, I leave you for my address, and I'm happy to answer or engage in any questions that you may have from today. Thank you very much.
Thank you.